Welcome to the KISS Investing pre-election weekend review. After 2 weeks of pretty flat markets, we really had some excitement this week, and I'll tell you why I think we've had this excitement. First of all, let's talk about factor number one, COVID. COVID cases have been rising in the US in an exponential rate. Today, Saturday, it reported that we broke the 100,000 case count for the first time in a long time. And we've been, you remember we've been having 30, 40, 50,000, and then it went up to 70, 80, 90,000 this week, and we finally hit 100,000. And of course, the stock market doesn't like that. And it doesn't like it because of what could be coming. More lockdowns, more restrictions, less chance to go out, less chance to spend money. And of course, all those things affect the finances. Factor number two, the upcoming election. You know how I feel. Either way, Republican or Democrat win, I think the market will end up being fine and being up. But the scenario that could be very troubling would be a contested election. And I think the market is reflecting those feelings, especially this week, because they don't know if we're going to have a clear winner or not on Tuesday after the election. So that's the second factor why I think the market is having a tantrum. And factor number three, earnings and guidance. This week we've had earnings from the FANG stocks: Apple, Google, Facebook, Amazon, Netflix, Twitter, etc. And as we will see in the following slides, all those expectations were very, very lofty after huge gains, and they did not meet those expectations. Even Apple had disappointing iPhone numbers, maybe because the iPhone 12 came out later this year than it normally does, but who knows? iPhone sales are going down, and the FANGs are priced to perfection. Also, companies are not willing to give any more guidance on what to expect their earnings and sales to be in the following quarters. And that uncertainty is factor number three, why the stock market is not liking it now. I think next week after the election, volatility will normalize, and then we'll have some more certainty of what will happen. Without further ado, let's go and see what happened in our week in review. Very well, let's start taking a look at the COVID positive cases in the US. As you can see, in April, where everyone was freaking out, we were hitting about 40,000 cases every day. Then during the summer months, it went down to around 20,000 cases a day, and it has been steadily increasing since the end of August. And finally, we hit 100,000 cases on October 30th of this year. And that is a big reason why the market is not liking it. Of course, thank God, deaths are down, and we have learned to treat this disease. But still, there's not a treatment. Still, there's not a vaccine. And the market is worried about upcoming restrictions on travel and entertainment and going about our normal lives, even with using a face mask and social distancing. So as long as cases are going up, I think the market is not going to like it. Now let's take a look at the revenue of the FANG stocks. The FANGs, reported all this week, and look at these numbers. Amazon, which is a huge company, an amazing company, increased its sales 37%. Yeah, it's quite a bit. And Apple is a mystery because Apple's sales were only up 1% and iPhone sales were down big. Actually, iPhone sales had a peak about 2 years ago, and Apple has never seen those numbers again. And the S&P 500 revenue growth year over year is down 5%. But Apple is up more than 80% on the year, as well as the FANG stocks, and the market seems to be shrugging off these crazy valuations for now. Now let's take a look at the Dow stocks. We have a lot of positive Dow players like Microsoft, Home Depot, Nike, Walmart, etc. And then we have really some nasty down moves. Boeing is down tremendously, and as well as Walgreens, Chevron. The financials have been hit crazy. JP Morgan is down 27% for the year, American Express 25%, Cisco Systems 23%, while Disney, even though it launched Disney Plus, is down 16%, Goldman Sachs, another financial, down 15%, and Coca-Cola surprisingly down 11%, and Verizon, which is a dividend play that I like, as well as Johnson & Johnson, are down 3 to 4%. So as you can see, it's a tale of two types of companies. Technology companies like Salesforce, Microsoft, Peloton, etc., they're up huge. And regular companies, especially financials, are down tremendously as they don't like low interest rates. Now, let's take a look at what happened this last 5 days. We started going down on Monday, and we never stopped going down. Never stopped going down. Look at these numbers. The Dow was down 6.5%. The NASDAQ was down 5.5%, same as the S&P. And the Russell, which has been super strong lately, was down also 6% for the week. Now let's take a look at the whole month of October. You would think that October was down a lot. The only index that was up for the month of October was the Russell. The Russell was up 2.5%, and the S&P down 2%, as well as the NASDAQ and the Dow Industrials. Now, let's take a look at the year-to-date. If we look at the year-to-date, we can see that there's really no panic. The NASDAQ is up humongously, 26% up for the year. The S&P, even with the ugly week we had last week, is up about 1.3%, and the Russell and the Dow are down 6% each for the year. So it's not been a bad year for most of the indices, and the NASDAQ still holding up very strongly. Now let's take a look at the parts of the S&P 500. Look at this week. The technology sector went down 6.5%, as well as the industrial sector and energy. Energy keeps going down no matter what. Energy is down 52%. Companies like Exxon, which unfortunately I own, now has a humongous dividend, and they fired thousands and thousands of people in order to keep the dividend alive. And this is very unfortunate, because the last thing we need is more unemployment. And a sector that I really like, which are the utilities and the real estate sector, were also hit hard, 3.5% and 3% respectively for the week. So as you can see, nobody was spared in this last week that we had. Now let's take a look at the FANG stocks. Tesla was down 9%. Apple, which reported kind of disappointing numbers, was down also 6%. And Google surprisingly had been the ugly duckling, was only up 20% for the year, actually managed to have an up week because they reported very solid numbers for the week. And if it wasn't for Google, the FANGs would have been all red once again. Now let's take a look at our anti-bubble positions. As you know, these are positions that I like to hold in case the S hits the fan, which it happened this week. And if you were in bonds, either SHI or TLT, luckily you were able to escape the rout. Gold went down, which is a safe haven sometimes, went down 1.5%, and but it's still up 23% for the years. Gold miners got whacked, also 4% down. Actually, I want to add to my gold miners next week if we see more weakness. Remember, these are sectors where you can put some money to work and you can protect your money while we're having this rough time in the stock market. Thank you very much for watching KISS Investing Week in Review. Fasten your seatbelts, everyone, because next week is going to get very exciting. And hopefully all the uncertainty will go away and we can go back to resuming a much normal stock market that we all want. And if you like this video, please consider sharing it. Also, it would help me out a lot and help out the channel if you could click like, and if you could subscribe to the channel as well as click the notification bell. And remember, if you want to improve your personal finances, I have a free course called the 9 Proven Steps to Becoming a Millionaire. Click on the link below. And if you want to open a tastyworks account, the best trading platform on planet Earth, I have an affiliate link below. You can open your account at tastyworks also. Be careful out there, it's gonna get wild. And if you're nervous, there's nothing wrong with taking some positions off or reducing your exposure. You gotta risk it to get the biscuit. And we're gonna risk a lot of biscuits next week. Good luck, everyone.